Well, the key trigger this month was always going to be the Fed FOMC meet, and the result of that has come through. The Fed has hiked its rate by 75 basis points as expected, 0.75% higher, back-to-back 75 bip hikes, and taking that policy rate to 2.25 to 2.5%. That's the range in which it is at the moment. Let's try and analyze what the commentary said. They suggested that they were anticipating ongoing increases will be appropriate. They're expecting recent indicators of spending and production to have softened a little bit as expected. Job gains have been robust, though unemployment rate has remained low and inflation remains elevated. So the FOMC is highly attentive of inflation risks, is what the commentary suggests. The balance sheet reduction will accelerate in September, is what they say, with of course the runoff rising to 35 billion MBS and 60 billion MBS for treasuries. That's how, sorry. मुझे लगा नो प्रॉब्लम, करता हूँ वापस स्टार्ट. Well, the key factor, of course, this month was going to be what the outcome of the FOMC meet was going to be, and that has now obviously come through. 75 basis point hike, back-to-back 75 basis point hikes, 0.75% higher, taking that policy rate to 2.25 to 2.5%. And let's try and break the commentary down. Of course, the Federal Reserve anticipating ongoing increases, as appropriate. That's a very balanced statement. Moving quickly on, the recent indicators of spending and production, according to the Fed, have softened, of course, as was expected. But job gains, on the flip side, have been robust. Unemployment rate has remained low, and inflation continues to remain elevated. And the FOMC is committed and highly attentive to fight this particular inflation risk coming through. Also, with regard to balance sheet reduction, they will continue to accelerate in September as was earlier planned. With regard to what Jerome Powell said, he said, I do not think the US is currently in a recession, and the reason there are too many areas of the economy are performing too well, positive. Moving quickly on, he also said, while another unusually large increase could be appropriate at our next meeting, that decision will depend on data between now and then. And third, as the stance of the monetary policy tightens further, it will likely become appropriate to slow the progress of or the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. So these are the three major quotes which highlighted what the policy stance is and what it's going to be going forward as well. Moving quickly on to what US indices did. All three US indices jumped, and jumped quite dramatically in trade. In fact, the Nasdaq was up 4% in trade yesterday. The Dow across sectors was positive. All sectors gained in trade yesterday, and the Dow rose over 2.5%. The Dow rose 1.73%. The S&P 500, all sectors in the green, up 2.5%. Now, moving quickly on, Meta, which is Facebook's parent, fell due to poor results, and US futures as of today morning are lower. So some reversal coming through on US futures. Moving quickly on to European indices. European indices were in the green, but of course that is prior to the Fed commentary. European indices closed before the Federal Reserve meeting ended, and of course the announcement was made. Moving quickly on to US, of course the positive global cues and positive US indices led to Asia being in the green. We're looking at Nikkei up around 1/3%, Shanghai up around 0.8%, Hang Seng up around 1/5%, the ESX 200 up 2/3%, and the Kospi up 0.9%. So across the board there's green. The SGX Nifty also indicating a higher start, 0.75% higher to start off in early trade today. Moving quickly on to commodities. Well, US oil reserves have fallen slightly, which is what has led oil prices to spike up a little bit. It's heading towards the $99 a barrel mark as we speak. It's just below $99, 98.7 is where it's at the moment. Brent too has inched higher towards that $108 a barrel mark. So keep your eye out on oil. That's gone a bit higher. On the back of that Fed commentary, surprisingly, gold has gained sharply. It's moved up from the $1,715 an ounce where it was yesterday, where we left it, $1,736 an ounce as of today's start, and it's continuously gaining higher, so up around 1% even in trade today itself. Moving quickly on to bond yields. Bond yields, they were on the other side of 2.8%. They've come back on the lower side of 2.8%. 2.78% is where currently the 10-year US bond yield stands, and of course that's on the back of the Fed commentary, which suggests that maybe the acceleration won't be as fast going forward. There will be an evaluation and there will be a calibrated increase if at all necessary. So keep your eye out on that. On the back of that, the dollar index too has cooled off from that 107 mark to the 106 mark. Dramatic reduction in terms of the dollar index that's come off quite sharply. Moving lastly to cryptos, of course, risk off assets back at play, and cryptos is back. Bitcoin is above the $23,000 mark as we see it at the moment. So good sharp increase, 2% higher even in early trade today, and across the board I can see green. Ethereum too is up 4%. So clearly across the board there's green, especially on the crypto side. Lastly, we're expecting obviously a positive start for Indian indices, largely on the back of good strong positive global cues. So look out for, let's see how Indian indices start off in early trade today.